Welcome to another stage analysis video. It's Wednesday the 20th of December 2023. Just going to do a brief midweek update, just having a look at what's going on with the major indexes, some of the short-term market breadth and the yesterday's watchlist stocks to see what's going on there. So a bit of a change of behaviour today in the S&P 500 and the other major indexes. You can see this bar here. We made a buying climax bar on the daily chart here, making a new 52-week high and reversing back down here through a number of bars, 3 or 4 of the previous daily bars. So we're back to last week's level when you actually note we got outside the free ATR level last week on the Wednesday on the Fed rate decision. So talked about that on the last week's video. We've now come back in after being extended for the last 4 or 5 days here, so coming back to similar level to where it was last week, but now not as extended. So while this was outside of the free ATR range, we've now pulled back into the +2 ATR range, so coming back in a little bit, but still within this short-term uptrend, which we define by using this 1 ATR level here. So we'll draw this line on here quickly. So we're still in this short-term uptrend. There's still 75.2% of stocks above their 20-day moving averages in the S&P 500 here. It hasn't yet dropped back down below the key 70% level. During pullbacks, sometimes it can dip down into the mid zone, come down into around the 50% level before rebounding back in again. But generally, when you're in that short-term uptrend, the majority of the action stays above the key 70% level here. So if we do see a dip down here, if this does become a little bit more significant, we get back into the neutral zone between the +1 ATR level and -1 ATR level area, then we could see this percentage of stocks above their 20-day moving average drop more into the middle range here, which could be if the market is going to continue in stage 2, could be an opportunity once it starts to turn back up again. But at the moment, we've got our first change of behaviour after a good month and a half. A really strong rally here. You can see the S&P 500 has rallied up to around 16% off of the swing low on the 27th of October. Now back to around 14%. So still, as I said, in a strong position. And while it's a short-term change of behaviour on this daily bar, in terms of the short-term trend, nothing has changed and it continues to be in a short-term uptrend here. Look at the NASDAQ 100, similar kind of move. It also had what we got there, 5 days outside of the +3 ATR level, and today, after making a new high, reverse back down. So if we actually pull this out to the weekly, you can see the NASDAQ is actually at a key level on the weekly chart here, where it's testing that 2021 high. So some kind of reversal move around this area would be to be expected at this point, especially going into the year end after a strong move for 6 or 7 weeks now in a row. So at the moment, a logical point to make a pullback, but again, we can see the +1 ATR level here. It's still in above this level. We see the pullback that came below that and came back out again. So this is what I was talking about in the previous one. When we come back in, we start to move back up through here again, and potential for a continuation. So if it does continue to dip back down here, or if we start to tighten up, then push on, then potential for a further continuation breakout. But we do see a change of behaviour if this does start to dip back down through the 21-day moving average and start to come down here, then a 50-day moving average test could turn this into a potential up thrust. We start to think more about a more major double topping pattern at that point. But at the moment, again, the short-term uptrend remains intact. There's 82% of NASDAQ 100 stocks still above their 20-day moving average, so still in a strong position, but certainly the first sign of a change of behaviour for a good month and a half here now. If we look at the NASDAQ Composite, similar kind of behaviour again, also sitting at the +2 ATR level. We've got 68.25% in the NASDAQ Composite above their 20-day moving average. So this covers good 3,000 or so stocks in the US market of the major stocks. So again, in a strong position, as long as it's above in the upper half in the 60+% range or so. It's in a strong and healthy position and above this +1 ATR level, so remains in that short-term uptrend at the moment. But as with the NASDAQ 100 and the S&P 500, we have got a little bit of a change of behaviour bar here, significant bar breaking below the low of the past 2 days after getting a little bit extended in the short term. But at the moment, nothing more than a normal pullback within a short-term uptrend. If that changes, again, we need to see it start to move back below at least the 21-day moving average in here, at which point it would be coming back into the broader structure and then could once again turn into a UTAD type pattern if that was the case. But again, looking for this to, as we're in a short-term uptrend, we'll stay on that pattern for the moment, and whether if it starts to hold here, we'll be looking for continuation attempt to new highs. NYSE, again, very similar behavior, seeing it across the board here, so back to the +2 ATR level after being above the 3 ATR level for 5 days in a row. So coming from an extended point from last Wednesday back to a more not yet neutral, but still in a strong uptrend position at the 2 ATR level, but certainly the strongest, most significant bar on the downside that this has had since this rally attempt started back at the end of October here. So again, if it starts to break back down below the +1 ATR level and the 21-day moving average, then would be more of a start to become more of a concern. But at the moment, the trend remains intact with 77.88% of the NYSE stocks above their 20-day moving average, so which covers around 2,000 to 2,500 stocks in the market. So the broad market remains in between the NYSE and the NASDAQ Composite, both remain in healthy positions currently. Small caps, still got this on from last week's actually, so if I scroll this up a little bit and annotate this. So last week on Wednesday's video, we had the short-term extended at long-term resistance with the whole candle above the +3 ATR levels. That was this bar here. So you can see that what I mean by that is the low of the bar is above the 3 ATR level here, and the entire candle is above that. So at that point, it's extended. It hadn't been at that level in the entire year, so it was its strongest point that it had been in the entire year last Wednesday, and has since consolidated, pushed a little bit higher, and then made a potential short-term buying climax today. So if we get rid of this now, save that. We now come back into the range, still above its +2 ATR level, +1 ATR level in the 21 day. So still within this strong short-term uptrend, but coming back in at the top of the range. If we broaden out to this level, this has been a major area of confluence over the year. It's failed 3 times and rolled over, so it's to be expected that there would be some kind of test at this point here. If it does manage to follow through and push out to new highs, starts pushing through that 200 level, then the stage 2 attempt would continue. But at the moment, we're just a week or so into the stage 2 attempt. But if it does come back strongly, we start to see it come below halfway or more of this significant bar here, then that would then be of some concern, making it a potential upthrust again for the 4th time. But at the moment, still in that short-term uptrend, as I said, and nothing in terms of the trend has changed so far. But certainly the most significant pullback it's seen. Still got 87.67% of the S&P 600 stocks above their 20-day moving average, so still in a very strong and healthy position overall. IPO, so this is an ETF of some of the most speculative IPO stocks. So this has had a good run over the last, since the swing low, moved up around 20 to 30%. I think it had a 30% move off the lowish. So what we got there, yeah, just around 30%. It's pulled back in a little bit now, so 25% at the moment. Still, again, as with the other major indexes, exactly the same position, +2 ATR levels. Still in that strong short-term uptrend, which it's been in for around the last month or so now. 50 days rising, 200 days rising. It is extended in the short term. If we scale out to the weekly, you can see we're back in stage 2 now for a number of weeks here, so 4 weeks now back into stage 2, but in a resistance area. We need to see this continue to push on higher into stage 2 further, as if it does roll at this point through here, then obviously it could turn into a UTAD, but not there yet. Again, short-term uptrend, very much the same as what we're seeing across the board in the major indexes. And then to finish off on these indexes, the ARKK. So again, most speculative growth stocks. So this has had a really strong move over the last month or so, 58.54% since the 30th of October low in this. So you can see the big gap up moves this had through here. It's accelerated multiple gaps higher, as we saw with some of the major market indexes as well. So this area here, we did have a gap up through, so a little bit of an island here. If it does start to pull back below this level, it would be of concern, but at the moment remains again above the +1 ATR level here. So still in that very strong short-term uptrend, still sitting around key support area from the July high. If it starts to, as I said, if it starts to break back below this 50 area, especially back below the 21-day moving average down here, which is what we are at the moment, 48.32, so then it would be of more concern. But at the moment this is just a normal pullback, but the most significant bar that it's had. Okay, and the VIX, we can see as expected today, spiking with that move and the significant bar in the S&P 500. See the inverse relationship that these two have. So we're coming back into some key levels here. So it does start to spike above this 14 to 14.5 area, especially if it closes above that, become more of a concern. But as long as it's below the 200-day moving average, which is still at 16.29 at the moment, it remains in the positive range, and it's just simply a pullback at the moment. So